Good afternoon. Welcome to our Rapid Response live event, Driving in Maryland. My name is Gia Wilkerson, and I will be your moderator for this event. Today, I am going to introduce you to the Rapid Response team at the Maryland Insurance Administration. Then, I am going to give you various scenarios to some of the auto insurance situations that the Rapid Response team has come across while helping Marylanders. I will read the scenarios, then a member of the Rapid Response team will provide the solution to the scenarios. Before we begin, I have just a few housekeeping notes. If you are a member of the Maryland Insurance Administration, please remember to turn off your VPN. If you are not speaking, please turn off your cameras. Today's event is being recorded. If you have questions for the presenters, please utilize the chat box. After the program, we will open it up for a live Q&A, beginning with the questions that have already been submitted in the chat box. If you are not asking a question, please keep yourself muted during the live Q&A and continue to use the chat box to ask questions. After the Q&A, breakout rooms will be available for anyone that would like to discuss any specific problems, questions, or concerns one-on-one with a member of the Rapid Response team. I will ask after the Q&A if anyone needs to speak one-on-one with a Rapid Response team member. The mission of our Rapid Response program is to help consumers resolve property and casualty claims, such as auto and homeowners claims, including those made under commercial line policies, quickly and without having to file a formal complaint. The Rapid Response program connects consumers that are having difficulty resolving a claim with special representatives at participating companies in an effort to help problems resolve quickly and directly. Participation in the Rapid Response program is voluntary and does not affect the consumer's right to file a formal complaint. I would like to introduce to you Mrs. Mary Jo Rogers and Mrs. Cheryl Coons of our Rapid Response team. They will be providing the solution of the various presented scenarios. Cheryl and Mary Jo, would you like to say hi?
Hi, everyone. Welcome to the Maryland Insurance Administration Rapid Response Review.
Good afternoon, everyone. I hope you gain some insight and information into insurance claims handling.
All right, let's get into our scenarios. Jennifer was traveling along Main Street, which is a two-way road with two lanes in each direction, when the car beside her turned into her lane and struck her vehicle. Both cars were disabled and were towed from the scene. Jennifer's girlfriend was a passenger in her car when the accident happened. Jennifer contacted the other driver's insurance company and gave them a statement describing what happened. Several days later, she received a letter saying they were denying her claim and found her at fault. Their insured stated that Jennifer had changed lanes and struck their car. Jennifer then filed a complaint with the Maryland Insurance Administration. She stated in her complaint that the other driver was lying. The insurance company did not even look at the car and refused to take a statement from her witness, the passenger. She believed this was illegal. Mary Jo, why didn't they interview her passenger?
Witnesses may be independent or biased. A biased witness is someone who knows either driver, and their version of the loss may be biased towards their friend. Insurance companies may take this bias into consideration and feel they won't get a neutral account of how the accident happened. An independent witness is a person who does not know either party to the loss. Usually, the insurance company will attempt to take this statement, but if the witness refuses to give a statement or even return the adjuster's call, they probably won't accept a third-party account of what that witness would have said.
So why didn't they look at the damages?
In this case, the damages would be the same in either case, so the damages and points of impact would be the same no matter who struck who.
So Jennifer explained to the insurance company that their insured driver was lying. So why did they just accept their driver's version of the loss?
Unless there is evidence other than Jennifer's statement to indicate that their insured was not telling the truth, they may accept his version of the loss, just as Jennifer would want her insurance company to believe her.
So Jennifer ended up filing a claim with her own insurance company under her collision coverage. Her shop is telling her that because her car is fairly new and to protect her warranty, they must use something called OEM parts. These are genuine parts from the car's manufacturer. Her insurance company is saying they will only pay for aftermarket parts. Can they do that, and won't it affect her manufacturer's warranty?
No, they may pay for aftermarket generic parts that are often called LKQ parts. That stands for like, kind, and quality. And they're not required to use the OEM parts. If you are filing the claim under your own policy and you have purchased for an additional premium coverage for OEM parts, your own insurer will cover that cost. Also, keep in mind, federal law prohibits voidance of a warranty based on use of replacement parts. Some insurance companies offer additional coverage for an increase in premium to provide OEM parts if your car sustains damage in a covered loss.
Thank you. Tom and Julie's son moved back home after getting laid off from his job. He didn't own a car or have auto insurance. Their son generally used public transportation or took an Uber if he was going out with his friends, but he needed to run to the store. It was raining, so they allowed him to use one of their cars. While on the way to the store, he was involved in an accident and badly damaged the car. It was determined that he was at fault. Since Tom and Julie had collision coverage, they filed a claim with their insurance company. Their insurance company is refusing to pay for the repairs. Cheryl, if they had full coverage, that is collision coverage, why can their insurer deny the claim?
Most insurance auto policies require that the policyholders disclose all drivers residing in the household. So all licensed drivers in the household. Failure to disclose that, or in this case, add their son when he moved back home, can result in the denial of the claim. So it's very important that people advise their insurance company of all the licensed drivers living in the household. And this wouldn't apply to a son that was just visiting or a relative or friend. This would only apply to someone that is residing in the household.
Thank you. Ben got a policy of insurance a few years ago and wanted to get full coverage. He got his policy and saw that he had liability, comprehensive, and collision coverage. Loss of use to pay for a rental car and roadside assistance in case he broke down and needed a tow or had a flat tire. He also saw something called personal injury protection, PIP. He recently had an accident and needed to go to the emergency room. He also missed 5 days from work and had several follow-up visits with his doctor and some physical therapy treatments. He was told he could file a claim under his policy to pay his medical bills and recover some of his lost wages. When he contacted his insurance company to file a PIP claim, he was told he waived PIP and only had limited PIP. They told him he signed the waiver when he first took out the policy. He does not remember signing a waiver. Mary Jo, what is limited PIP? And if he waived PIP coverage, why does his policy show he has PIP?
PIP coverage is required by Maryland law with a statutory limit of $2,500, although you may purchase more. If you do not wish to purchase this coverage and to lower your premium costs, you may waive PIP. The law allows you to waive PIP for you and any passengers in your car that are 16 years of age or older. You are unable to waive PIP for children, which is what limited PIP is: coverage for any child injured in an accident while a passenger in your car. The law also requires that you affirmatively sign a form saying you are rejecting full PIP coverage. This form tells you what you will be charged for full PIP and the reduced amount of premium if you waive it. Often this form is completed when you are first taking out your policy. Additionally, it is often e-signed, which is allowed by law. If you don't remember signing it, If the insurance company can produce the waiver and you are only being charged the lower amount for limited PIP, there will be no claim payments. If you wish to add full PIP, then this must also be done in writing. So if you've originally waived it and you now realize you really do want it, you must sign again to get the PIP added back to your policy. You may contact your agent, broker, or your insurance company if you are interested in adding PIP coverage.
Thank you, Marjo. Michael was driving home one evening when he struck a deer. He reported it to his insurance company and they did advise it was covered. He was told it was a comprehensive claim. Furthermore, he was told that his car was a total loss and they extended a settlement offer. Cheryl, why is this a comprehensive claim and what types of losses are covered under comprehensive coverage?
So certain types of losses are considered comprehensive losses because they are not as a result of a collision. So that would include striking an animal, or if a tree falls on the car, damage by floodwater, theft, vandalism. And there's a deductible that's associated for the claim settled under the comprehensive portion of the policy. It might be the same as the collision deductible. In a lot of cases, it's lower. And comprehensive is considered a no-fault coverage as far as what type of losses are incurred.
Okay. So Michael at this point does not want his car declared a total loss, but his insurance company told him it must be handled as such. Additionally, he disagrees with their determination of the value of his car. Cheryl, is there anything that he can do?
Well, Maryland regulations require an insurer to deem a car a total loss if the cost to repair the car is more than 75% of the ACV, or the actual cash value of the vehicle. So, and even if it's not quite that 75%, the insurance company can make a business decision to handle it as a total loss if they believe that the repairs they start are additional damages we discovered. So it would increase the cost of the repair 75% threshold. And in regards to disputing the value, he can dispute the value. He can submit proof to that it has a higher value. So this would include ads from similar vehicles for sale, or vehicle valuations from sources such as KBB, which is Kelley Blue Book, or additional damages, National Automobile Dealers Association, which is NADA. And the insurance company must respond to those comparables within a 5-day time frame.
Okay. So now Michael and his insurance company have reached an agreement on the value of the vehicle, but it is still less than what he owes to the finance company. He has gap coverage, but he isn't sure exactly what that is or what it looked like. Can you explain it?
Okay, so car owners sometimes assume incorrectly that if their cars are considered a total loss as a result of a collision, theft, or other covered loss, their automobile insurance claim will be settled for the amount they owe. Often that's not the case. The difference between your car's ACV, or actual cash value, and the balance of your loan or lease is the gap for which you're responsible. Many auto insurance companies offer GAP, which is guaranteed auto protection insurance, as an optional coverage that is available for purchase when physical damage coverage, comprehensive and/or collision, is included in the policy. GAP insurance generally will pay the difference between the ACV, actual cash value of the vehicle, and the current outstanding balance on the loan or the lease. But it's important to ask questions regarding the extent of coverage, as some GAP policies will limit the amount paid to a percentage of the vehicle's ACV, or actual cash value. In certain situations, the policy holder who is extremely upside down on the loan, that just means that they owe more than the car is actually worth, may still be left with the balance due to the lender or lessor if the policy contains a specific dollar limitation. Another option available to borrowers is to enter into a debt cancellation agreement. A debt cancellation agreement is a contract between the lender and the borrower that cancels out a debt in the event of a listed condition or contingency. A debt cancellation agreement is not insurance coverage. Typically, an auto dealership, bank, savings and loan, credit union, or finance company offers this kind of protection to its customers for an additional fee, which may be incorporated into the financing agreement. If the vehicle is declared a total loss and the balance remains due to the lender or lessor after the auto insurer pays the ACV or actual cash value of the vehicle, the debt cancellation agreement requires no further action to be taken by the lender or the borrower. The debt is simply forgiven. The lender does not provide or pay a benefit to the borrower. Debt cancellation agreements are not insurance, so it's not something that the Maryland Insurance Administration would regulate.
Thank you. Mary Jo, John signed up to drive for Lyft to earn some extra income. He was told he needed to purchase additional auto insurance through Lyft. He is confused why his personal auto policy isn't sufficient, and if he does take out this additional auto insurance, when would it cover him?
Companies such as Lyft, Uber, and Sidecar are ride-sharing services. Ride-sharing is the term used to describe when, for a fee, a person drives someone in their automobile. The rides are arranged through an online application, which is created by a transportation network company, TNC. Currently, the major TNCs are Lyft, Sidecar, and Uber. Most automobile policies do not provide coverage when a driver accepts payment to drive others. This is different than carpooling. Typically, you will need to purchase a commercial policy to have the appropriate coverage. Some TNCs offer limited coverage. If you do not have coverage, you may be personally responsible for payment for medical expenses for anyone injured and any automobiles that are damaged in an accident that is your fault. If you are considering becoming a TNC driver, you should do the following. Number one, ask your insurance company if your current policy provides coverage. And if not, does your company sell that coverage? Number two, if you are making payments on your automobile, check with your lender or lessor to see if they permit you to drive for a TNC under your loan or lease agreement. Additionally, if you have gap coverage through your finance company, bank, etc., you may want to check to see if your gap, which is the debt cancellation agreement, would apply while you're driving for under a TNC. Three, before you sign the TNC agreement, review it carefully to find out what it covers and whether the coverage differs based on when the accident occurs. For example, when you have a passenger in the vehicle versus when you are going to pick up a passenger. Also, make sure you know what the deductible is and what the maximum it will pay. Before you enter into a TNC agreement, it is essential that you understand your exposure.
Thank you. Derek and Sandra recently met with their agent to go over their auto insurance coverages. Currently, they carry limits of $15,000 in property damage and $30,000 per person bodily injury and $60,000 per accident bodily injury. Their uninsured underinsurance limits are the same. They were told this is the amount required by Maryland law. Their agent is advising them that they should be carrying higher limits and even suggested that they think about purchasing an umbrella policy. Cheryl, if they have the amount required by law, why should they carry higher coverage amounts, which will raise their premiums?
Well, if they have an accident and the damages and or injuries exceed the amount of their coverage, they may become personally liable for the additional amounts. So let's say that the cause damage to a new expensive vehicle, which renders it a total loss, and the value of the vehicle is over $50,000. They may be held responsible for the difference. or even if several people are badly injured or permanently disabled, or even death as a result of the injuries, they may be held personally responsible. So they may have liens placed on their property, such as their home or any other assets, such as bank accounts. They may also be subject to wage garnishments and other legal actions. Um, so the medical expenses and vehicle values can easily exceed the amount of the mandated coverage. They may have, if they're a successful couple, they may have extensive assets. And for a few $100s a year, they can purchase an insurance product called an umbrella policy. These policies are generally issued in increments of $1 million. So the policies are additional coverage on top of their auto, home, owner, or boat policy. So it's increased liability coverage. So for example, if their auto policy is $500,000 in bodily injury, by adding an umbrella policy, the limits would increase to $1,500,000. So it'll be on top of that coverage. And that would also apply to their underinsured or uninsured coverage if they were involved in an accident with a driver who carried the state minimum or had no insurance.
Okay. Well, thank you to everyone. That wraps up the scripted part of our program. And now we are going to take any questions. If you have any, please put them in the chat box. And so far, I don't see any questions. So thank you for joining us today for this very important event. Please reach out to our contacts. Mary Jo and Cheryl can give you their email addresses if you have any questions that you feel were not answered today. This recording will be available on our website in a few days. Cheryl and Mary Jo, can you just give your contact information, please, or put it in the chat box?
Sure, I can go ahead and add it to the chat box.
Thank you. Oh, okay. So Kim has a question. There are two questions in the chat box. Kim would like to know, is it good to save $200 on the premium for increasing deductible from $500 to $1,000?
I can go ahead and take that one. That's going to be a personal preference, but you have to understand that once you're involved in an accident, then you're going to, your deductible is, you're going to have to come up with $1,000. So that's a personal opinion, whether you want to do that or not. I mean, your premiums would be lower, but if you're involved in an accident, you would have to come out of pocket with a higher amount.
Okay. And Mary Jo, is it possible to be overinsured?
To be overinsured? With auto insurance, generally not. Again, as Cheryl talked about, the umbrella policy, potentially $1.5 million in coverage. If I like to use the example that you're momentarily distracted, you miss the stop sign, and you hit a school bus full of 35 children, school bus rolls over. Multiple children are injured, broken bones. Maybe the bus driver got ejected and died in that accident. If you carried state minimums of $15,000, that school bus, which is now a total loss, is way more than $15,000. You've got 35 children injured. You've got a deceased bus driver, and the maximum you carry is $60,000. They are going to, if you own a home, you've got some assets, you might have a motorcycle or a boat, you've got a bank account, you've got some money saved up. Even if you're just starting out, they can get judgments against you. And those judgments are good for 7 years, and then they can be renewed. So you become personally on the hook. Another situation I tell people, You, again, same thing, momentarily distracted, you didn't see the stop sign, you run it and you hit a brand new Mercedes Benz. It's a $75,000 automobile. You carry $15,000 in coverage. Well, your insurance company is going to pay $15,000 in coverage. And that owner of that Mercedes Benz probably has that $1.5 million. So they're going to use their underinsured motorist coverage. So in that case, someone is still not off the hook because their insurance company is going to pay the other $60,000. And then their insurance company is going to come after you to recover that $60,000 amount. And you're going to be dealing with insurance company and their lawyers. So as far as being overinsured on an auto insurance policy, I don't think you can be. There's only specific coverages such as the liability, which is property and damage. If you have an at-fault accident to take care of anyone injured or their property that's damaged. Collision and comprehensive coverage is protecting your automobile. PIP will cover your medical expenses. And you may want to cover other things such as rental car expense. So if you have an at-fault accident and your car's tied up in the shop for a week or two, you're going to have a vehicle to get you back and forth to work and the grocery store or the doctor's office. So as far as auto, I don't see how someone could really be overinsured.
Okay. Next question. What are the general limits to have in coverage?
Again, that's kind of a personal option. I mean, we've told you about what the state minimums are. That's what's required by law. And that again is to protect other people in the event you have an at-fault accident. So what amounts you choose to carry, but you can carry coverages. Umbrellas come in amounts of $1 million. Some people buy $2-3 million worth of coverage. They've got a lot of assets. They want to be protected. So I tell people you may want to talk to your insurance advisor. That may be your agent, producer, broker. Discuss it with your insurance company. Ask them what ifs. Well, what if I do go with 500,000 and $1 million umbrella? What are my costs going to be? So call your agent, broker, insurance company, and they'll be happy to do those calculations for you so you can make a decision. We can't recommend to you what you should cover. We can just tell you what they are, and if you don't carry sufficient amounts, what the outcomes could be.
Okay. I believe we touched on these. Sure, I believe these were your questions, but if you could just elaborate a little bit more. Mary Jo did mention it as well. But is it best to have an umbrella policy? And also, how does gap coverage work?
So the umbrella policy is going to protect you in case of a catastrophic loss over what the limitations are. So if you have state minimums in coverage, well, you actually that wouldn't apply. If you, under your policy, if you under your auto policy, if you had an accident with a truckload of Ferraris, and it went over what your coverage, your selected coverage is, the umbrella policy would help to pay or would pay the additional amounts over. And that also, and we're not talking about homeowners, but it also is a liability coverage that can assist you with your homeowners. So if you have assets, it certainly is best to have an umbrella policy so that you're not held personally responsible over and above your coverage. Now, most insurance companies will require that you carry a certain amount, maybe 100, 300 or something like that. They're not going to offer an umbrella policy for state minimum. So I corrected myself on that one. And you
Okay.
said as far as the gap coverage, we kind of went over that and what that coverage is. It is coverage for when you have a policy or when you owe additional monies on your vehicle after it's been declared a total loss, each policy may be a little bit different. It might be a percentage that this particular gap policy would pay the difference. But that's going to vary on who's writing that policy,
Thank you.
if that answers
Miss
that.
Miss Rose received several emails stating that Maryland has a rebate for seniors. Is this a scam?
There is no such thing. I have also seen on the internet and so forth about rebates. There is no such thing as rebates for seniors or for anyone. I can't speak to exactly, but I've seen some on the internet. You may be on Google or Yahoo or on search engines, and you see these ads pop up or these links to that there's rebate and you only have to pay $1 for insurance. Those are scams. There is no such thing. They want to get your information. They want to get your email address, your information, so they can try to sell you things. There is no rebate program for seniors or for anyone.
Okay. So speaking of scams, what are some common auto insurance scams?
I
I can't think of any off the top of my head.
can't think of any. The insurance companies um, generally don't. I mean, they can advertise. Then you can call them to get a quote to see if you want to. But as far as insurance companies or agents committing scams, generally that's not going to happen. Insurance companies aren't. If there is an agent and you think the agent is doing something improper, maybe you were approached, and this can be an agent for any type of insurance, for health insurance, life insurance. So if you're approached, and I can tell you as far as you're a senior and you're on Medicare, and you are approached unsolicited by a salesperson who is trying to sell you some type of Medigap policy, supplemental policy, maybe a Medicare Advantage program. This isn't, they're actually approaching you, knocking on your door, calling you on the phone. That is illegal, and that's a type of scam. But as far as auto insurance, I don't really know of too many scams.
So
But
the consumer, not to cut you off, wanted to know what are some common auto insurance scams by consumers? She added on a little more.
well, consumers can, there is something called insurance fraud. It is a felony, and Maryland law prohibits insurance fraud. It can take lots of forms. It can be filing a false claim. It can be staging accidents. It can be something as simple as you live somewhere where the auto insurance rates are very high. So you have a friend or a relative that lives out in the sticks, and it's very cheap for them to get auto insurance. So you, on the application, don't give your real address, you give your friend's address to get a cheaper rate. That's a type of insurance fraud. So the scams with auto insurance generally can be insurance fraud. We also see situations where criminals will cause an accident intentionally. One of them we see a lot with seniors is called, what they'll do is they'll cut you off, slam on the brakes, and then claim you've rear-ended them, they're injured, where they really, and a lot of times it'll be two cars. The car in front is part of it. The car then comes in between you and the car in front and cause the accident. And then they claim they were always behind you. The car in front witnesses it. So especially with seniors, because they think the reaction is a little slower. So there can be those types of things. So, but a lot of those fall under insurance fraud. If you suspect any of those things, reach out to us. If there's a claim against you and you think there's an issue, please tell your adjuster your concerns. And again, reach out to us, the Maryland Insurance Administration.
Thank you. Cheryl, In Maryland, are auto insurance companies required to give discounts, such as multi-cars, home coverage, job type, education, etc.?
They are not required to give discounts. Most insurance companies do offer discounts for multi-policy and such. But as far as your job title or education level, um, they or income, what type of job you have, there may be what's called a tiering. So in a tiering process that an insurance company uses statistics based on certain areas or certain job titles that would offer a discount or tier the policy for a certain rate. But Maryland does not require, they only require that those rates are filed, but Maryland does not require an offer of a discount for any type of uh, job title or anything like that.
Okay, thank you. Mary Jo, if my premium goes up as a result of a towing claim, how long will the increase be applicable?
The increase, anytime you are surcharged for a claim, generally that will be for 3 years. And Cheryl can answer that as well, because Cheryl worked in the unit that dealt with protests of premium increases.
If I switch auto insurance companies, would my current auto insurance company
Gia,
report me as
Gia,
non-payment?
this is Joy. Hold on for a second though. And this is probably what Cheryl would probably add.
Okay,
Just because the quote unquote premium increase is only for 3 years, if you also had a discount, that discount could be removed for longer than 3 years. So please understand that you need to look at not only an actual premium increase, but if in fact you lost a discount, and you could lose your discount for longer than 3 years.
And I would just add to that the chances are the premium increase is as a result of a loss of a discount, because that type of claim is not a loss, so to speak. They would only probably affect a discount on the policy versus surcharge of the policy, which would be for an at-fault loss.
Cheryl, if I switch auto insurance companies, would my current auto insurance company report me as non-payment? So I guess if I switch in the midst of my bill cycle and I don't pay that payment, will
So
that company?
if the policy canceled for non-payment,
No, not
there
cancel if I just decide to switch.
if you
Like if
just
I don't
decide,
like your company and I switch from you and I go to Mary Jo before my payment is due to you on August the 3rd, would you
okay.
then report me as non-payment?
Gia, let me take that one.
Okay,
You wouldn't be reported as non-payment, because hopefully you would contact the insurance company or your agent to let them know you wanted to cancel that policy and that you are going with another insurer. And you want to make sure that you don't even have a 1-day gap, because that could leave you open for a fine with motor vehicles. But what can happen if you cancel midterm, an insurance company can do what's called a short rate cancellation. So I say, let's say your 6-month premium with your old company is $500, and 3 months in you cancel it, and you've already paid the $500, or even if you're paying it monthly, so you're assuming you only owe $250, and you're either going to be refunded $250 or you won't owe $250 for the remaining 3 months. But that's incorrect. They can do what's called a short rate cancellation, which means they can retain a certain amount of the unearned premium. And it's unearned because they're going to collect premium for a period where you're not being insured by them. It can be different amounts. I kind of tell people, think about it as if you return something to like electronics to some of the electronic stores, they charge you a reshelving fee. It's kind of that thing. It's to cover their administrative costs of canceling the policy. They will notify motor vehicles if the vehicle is no longer insured. You might get a notice from MVA asking for proof of your new coverage. So you won't be looked at as canceling for non-payment, but you can be subject to some unearned premium costs.
Okay. Could one of you please explain PIP again?
You want me to take that one?
Sure, Cheryl.
Okay, so PIP coverage is personal injury protection coverage under the policy. And this is no fault coverage that will pay for lost wages, medical expenses, copays, and such under the policy. Typically, that coverage is about $2,500. You can opt to have more. You can also waive PIP option. By waiving PIP option, it would give you only limited PIP, but you can't waive for people that are under 16 or children. But you can waive coverage for yourself. It does require that you sign or that you advise the insurer that you are opting out of PIP coverage. So it's personal injury protection that's on the policy that covers medical expenses and lost wages. Is that enough information or?
I can add a little bit. You do have to sign it away, and you can e-sign. People will sometimes say they don't remember or they didn't sign. If that insurance company can produce that PIP waiver with your signature, whether it's an actual handwritten signature or an e-signature, an electronic signature, and they can show that your policy has had, and different companies call it different things. It might be limited PIP, it may be guest PIP. Just you have to kind of look at the definitions when you get your renewals and your policy, and they show that they have some type of signature and that you have been charged for the limited PIP, not the full PIP. Then you can't go back on that. Additionally, if you waived PIP and you are in an accident in someone else's car and they have full PIP, you're still prohibited. You cannot collect PIP under their policy either. So you waive your rights to PIP payments in any and every situation. Now, if you strike a pedestrian, whether the pedestrian could have walked in between parked cars and it wasn't your fault, even if your insurance company doesn't settle with them and finds the pedestrian is fault, they still can seek PIP payments under your policy. So that's even a little bit more.
Mr. Fisher has heard that trailers being towed are covered by the auto insurance policy. What about the motorcycle inside of the trailer? Are trailer contents covered when being towed?
They would not. So he would need insurance on that motorcycle. And again, he would need to look at his policy. Some policies have very limited coverage on the towed trailers. It may only be for liability. So if that trailer, let's say, broke loose from the trailer hitch, struck another vehicle and caused damages, they may not cover the trailer. They may extend liability to that trailer. So it's important to read your policy, talk to your agent, producer, your insurance company to find out specifically what your policy is going to cover. But generally, it's not going to cover the motorcycle on the trailer. Now, if you have the motorcycle insured for full coverage, which is comp and collision, and then that will come under the motorcycles policies coverages. I'm going to throw something in here kind of related to the prior question. You cannot purchase PIP coverage on a motorcycle policy. That kind of just popped into my head. There is their insurance companies are not required to offer PIP on motorcycle policies. Not that that was a question, but that was just another PIP, a little bit more PIP information. So
That's
I would
good to know.
suggest checking your policy or checking with your insurance professional, insurance company, to find out exactly what your own specific insurance policy will provide as far as the trailer is concerned and the items on the trailer.
Okay. Monique would like to know, what does she need in order to have a used vehicle insured?
So she would just need the VIN number of the vehicle. She would contact her agent of choice, her insurer of choice, and they will have a list of questions regarding the vehicle, but specifically the VIN number of the vehicle.
Okay. Ms. Rose teaches AARP driver safety. There are only a few insurance companies in Maryland that give a discount for taking the course. Do either of you know what steps are needed in order to get all insurance companies to give a discount for taking this course?
There
That's
would need to be legislation.
yeah,
Right now,
that would have to go through legislation.
Maryland law does not require them to offer that discount. That's a choice of the insurance company. There is nothing that requires them to offer that. And that would need to be a change in the law to require. So that would be something that the folks in Annapolis would have to pass legislation requiring that in Maryland.
Okay. Mr. Maurice has two questions. How do I know if an auto insurance company or agent is licensed to do business in Maryland? And also, he's thinking about renting a mobile home for vacation. Would his auto policy cover him for vacation use of his mobile home?
So as far as to find out if the insurance company or agent is licensed to do business in Maryland, that'll be on our website. He can just access that, www.insurance.maryland.gov. There is a complete list of the licensees and agents in Maryland. As far as renting a mobile home, um, a mobile home is stationary. If he's talking about an RV, like a drivable RV, um, then that's a different scenario, and he would be insured to drive that. As far as
He would not
who,
be covered. His audit personal, his, same as a rental car. If you are renting a car because your vehicle's in a shop and it is what's called a temporary substitute vehicle, then your own liability collision insurance would apply to that rental vehicle. If you are renting a vehicle for pleasure, or let's say you've got out of town relatives coming and you've got a little compact car and there's no way you can fit all of you in this little car, they don't know their way around town. So you rent a van so that you can all go out sightseeing or go out to dinner together. In that case, your insurance doesn't cover that van. You would need to purchase the extra coverage through the rental car company. Same thing.
that's where I was getting at, by the way. So the rental car company would offer coverage as well,
Right.
or
Yeah.
the mobile company.
Right.
Yeah.
You will probably, it's not a temporary substitute, and it certainly isn't a substitute for your vehicle. So whomever you rent that from would be able to sell you some type of insurance that would cover you while you are operating that vehicle. And oftentimes, a lot of those vehicles aren't even registered in Maryland. You'll see they'll have tags from other states on them. So you would need to purchase other coverage. If you use a credit card, you may want to talk to your credit card company. Some credit card companies will extend coverages if you rent a mobile home or rent a vehicle on vacation. But you may need to purchase temporary coverage through the company that rents that out.
Okay. Miss Cheryl's teenager has taken the written driver's test but is not driving. Does Miss Cheryl have to pay insurance backdated to when her teenager passed the written test?
So no, the insurance, and that's going to actually depend on the insurance company. Some insurance companies will require that the teenager be added to the policy as an occasional driver just in taking the test. Some don't until they are licensed. Um, Mary Jo, did you have anything to add to that?
That's correct. I mean, Cheryl's correct. I would check with your company or your agent because I do know that some of the companies that require that your child be added to the policy as soon as they obtain that learner's permit. And once you go, and we've had situations where people didn't, they waited till the child got their license. And then once the insurance company found this information out, they went back and billed. And if the child has had a learner's permit for a length of time, you could be looking at a surprise, very large bill. So the best question, like Cheryl said, it's different companies are different. Check with your insurer or your agent and find out what they require.
Okay. And I think this is more so a comment, not a question, but a scammer, not an agent, claims your license tag has been turned into the police for an accident. The scammer wants you to call to settle the issue. Of course, the scammer says that they are an attorney or insurance agent.
Contact your insurance company and let them know. Their job is if you ultimately they determine it was you, they're going to want to do things like inspect your vehicle. They're going to get a copy of the police report. Do not engage with the scammer. Get their information and then report it to your insurance company or contact the police. Contact the police with the information, the person that's trying to get money from you. Don't ever pay someone money that have given you a call on the phone or sent you an email. Check into it. Check with the police. Might be the first place you want to go. Talk to your insurance company. Their job is to protect you. It's called indemnify you. So if ultimately there's enough evidence to suspect that you were involved in a hit and run accident, they may pay it to protect you. If it's clearly a scam and a fraud, not only will they deny and defend you and protect you in that situation, they will report it. They are all insurance companies are by Maryland law obligated to report all suspected cases of fraud for potential prosecution. So do not give money to someone over the phone or to an email, but reach out to authorities or to your insurance company and let them handle it from there.
Okay. Mr. Maurice would like to know, is it best to get an umbrella policy from your auto insurance carrier or your home insurance carrier?
I think that he should check with either carrier and who offers the best rate. Usually, if he goes through, if he has a combination auto and home, but the same carrier, if it's separate, then he's just going to have to check and see who would offer the best rate for that.
Also want to check to see if one company might agree to issue the umbrella over all his underlying policies. Another company may not. Where you see this are some of the companies that are auto insurance only companies, and they contract with other. I don't like, for instance, Geico is an auto insurance only company. They only sell auto insurance, but they partner with multiple other companies to provide their customers with homeowners insurance. And that way they can get that multi-policy discount on both the auto and the home, although they're with two different companies. Many times in that instance, the auto insurer is the one that's going to say, for that instance, in that case, it would be Geico that would issue the umbrella, and that would cover the auto and the home, the boat, the motorcycle, the RV, whatever you may have. If you've chosen two different companies on your own, I would check with both, not just for price, but to make sure that if they issue it, they will cover. So if you have your home with company A and you have your cars and your boat with company B, company A might say, we'll give you an umbrella, but it's only going to be for the home. We're not going to cover your cars. Where company B might say, we'll give you an umbrella and we will cover both. So those are the questions to ask. Would they cover, if it's different companies, will they cover all your underlying policies?
Okay, thank you. Does anyone have any additional questions? Okay, well, that looks like all of the questions we have received today. Thank you everyone for joining us for this very important event. Please feel free to reach out to Ms. Cheryl Coons or Ms. Mary Jo Rogers if you have any questions that have not been answered today. This live recording will be available on our website in a few days. Have a great afternoon, everyone.
Thank you for
Thank
joining
you,
us.
everyone, for coming.
Thank you.
Thank you. Thank you. Very informative. Be safe, everybody.
But in the end, I